super excited to be here with one of the owners of Dolan and Murphy, Mr. Dan Dolan. It's just an absolutely wonderful thing that you guys have been able to create here. Pleasure to have you on Rise with Americanstruction.
Thanks for having me.
Of course, Dan, as we go in to this, would just love to start with explaining a little bit about your story and your background, because with Rise, having high resilience, integrity, service, and excellence, I mean, you guys embody that here at Dolan and Murphy.
Yeah, well, I was blessed to have a father that started our company in 1965, and he, even as a little young kid, we used to go on car rides with him, go look at farms, go look at property with him, so we were kind of weaned on it, so it was kind of fun. And though I graduated in 71 from high school, I had to wait till my 21st birthday to get my license, but I got all my classes in, and my dad let me work at Dolan Murphy while I was going to junior college. So I went to 2 years of junior college and had all my classes ready, and then my 21st birthday I took my license and been going ever since.
That's incredible. Now 50 years later,
50 years, yeah.
60 years in business, 50
April
years?
of 2000 or 1974, I got my license.
Wow.
So 50 years this year, yeah.
That's incredible.
Seen a lot of things over 50 years.
I could only imagine. Over those 50 years, what's, I guess, one piece of advice that you've been able, or has been your cornerstone in helping you thrive and have a very high level of success throughout your career?
Yeah, well, I think my dad, in his polite way, said, Dan, you have too short of a memory, so just, tell the truth, have integrity, and everything will come your way. And that's kind of what we've learned. My dad taught us that. My brother Brian, my brother Ryan's in the business, and we've been trying to orchestrate that and tell our kids this too. Just be honest and do the best you possibly can. Know your product, and you'll get through the hard times. And there's been some hard times, but boy, I'll tell you one thing: there's been some real wonderful times too.
That's incredible. And being honest and staying true and knowing your market shows after 50 years that you guys have been able to sustain the ups and the downs of the market. And we're in a funny place in terms of where the market's at right now. What is your opinion on the market and trends that we're seeing within the commercial space?
Well, you have to remember we came off probably 15 years of a great cycle, and we're still in an okay market. It's just that because of the ever increasing interest rate environment over the last 16, 18 months, it's really been hard for people to really underwrite things. And when you were underwriting things at 2% interest, and we had 14 ticks up to about 7%, that staging up, it just kind of put the money on the sidelines right now, to kind of waiting to see what happens. Now I think we're at the end of that cycle, and but it's going to be a while. I think the underwriting is a little more strict now for the money's not flowing like it used to do. And there's a lot of product out there that that had been refinanced about 4 or 5 years ago that you want to keep your eye on, that is going to have to be refinanced right now. And you're going from financing about at 2.5% up to maybe 6 or 7%. So there's going to be a lot of opportunity there.
For sure.
A lot of people are going to have to figure out what to do with those properties, because they're just not going to praise out like they did 6, 7, 8, 9 years ago.
No, 100%. Then in terms of deal velocity, we're here in quarter 3 of 2024. What do you think the next couple quarters are going to look like in terms of deal flow, deal velocity, and what you guys are seeing on your end?
Well, I think people are gearing up again. I know I talked to some of my peers in the industry, and they say, hey, at least we're busy again. We're getting busy, but they're still waiting to see who's going to have the money, who's going to start lending it, because the banks are pretty tight right now. They're still doing some lending. The insurance companies are still out there, but they're waiting. There's just going to be a lot of product coming onto the market. You are starting to see the housing market pick up a little bit. Multi-family housing is starting to be built again, because nothing's been built for a while. But that's always for the last 10 years also, that's been a dynamic industry, to the point sometimes where I would sell it, but I was too nervous to try to buy it because they were just buying at too low cap rates. But with nobody building homes and the selection being, I don't know if you know anything about the home industry. I had never sold a house in my life, but I know we bought a couple, and my kids have bought some. And you put a house on the market right now, because of the lack of inventory, they don't even have to put a price on it anymore.
Yeah,
It's just like, here's what we're asking, but come on with your best offer. And
right.
Some of these people are getting 5, 6, 10 offers on the first day. So that's kind of what our industry is seeing right now. Also, is that like I mentioned to you before, there's going to be some real opportunity here because of the overturn or the financing that's coming. And I think if I were a younger guy right now, I think I'd probably line myself up with some money managers that are in the real estate business, because and I think you're even seeing some of the bigger players right now start to raise funds to be able to go out and buy these opportunities, because there's going to be a lot of it coming here over the next 5-6 years.
For sure, and it looks like, I mean, the data center industry is just on fire.
Yeah.
It's incredible to see. I know the Prime Group, they just bought a $12 million property on LaSalle Street that they're looking to convert into a data center. But you see the big REITs like Blackstone just hit $1 trillion in assets under management. And a lot of these trends now, what we're seeing is, on my end, is that they're looking and setting aside capital just for data centers. You guys seeing that?
Absolutely.
That too?
Yeah, well, and it's been a learning curve for, and I can't talk about all municipalities, but I know in the Aurora land area, you know, at first data centers were looked at like, oh man, they're just big boxes, you know, they don't create a lot of jobs, but then as you started to learn a little bit more what they're doing, how that is the future, they are also generating a lot of tax. Through the energy tax. You know, they use a lot of energy, and that energy tax filters back to the communities, and they're starting to see that, and this is something that's it's not here and gone, it's gonna be continued forever as long as the data centers are still in place. So they're starting to feel like that. So they're kind of like, the data centers are the hot thing right now.
Right.
Yeah. And there's a need for it, because, you know, who knows what's going to be like in 20 years when I'm not here, but with AI and the way you guys are going, you're going to see some remarkable things.
Man, I think you're still going to be here in 20 years. Your workout regimen, your routine, how good you look, my man.
Well, I'm going to be 72 this year, so I feel pretty blessed.
That's super blessed. I mean, coming on your 72nd birthday, how have you been able to maintain such good health, shape, and fitness over these years?
Well, I guess we've always been taught to work hard, play hard, and give back a little bit. So this little grandbaby's helped me a lot. getting a little bit of my abs back.
Yeah, getting the abs back, right? I love it.
No, I just always have been, you know, always been very active, whether it be working hard or having fun, or, you know, whatever we do, you know, one of the best things my dad ever taught me, and we're teaching our kids, is to also give back. Dolan Murphy's very philanthropic. Not a lot of people know what we do. We don't really care, but, you know, we do it because we love our community. My dad always said, what's good for Aurora, Illinois is good for Dolan Murphy, and what's good for Dolan Murphy is good for Aurora.
Amazing.
So, you know, one of the things that I would suggest as a young man, you know, if you get into this industry, is first of all, find out what niche you want to do, and then when you find that niche, go out and find the players that are in it, learn from the guys that are in the industry, and then affiliate yourself with those organizations. So one of the things I did when I made my first big deal, I think was we did about a 60,000 square foot lease in Aurora back in '75, and I worked with one of the premier industrial guys in Chicago. Guy named, I think it was Dick Lamphere, or what? His last name was Lamphere. I can't remember whether. So after I did this, I said, well, you know, I really liked the industrial portion of it. I never wanted to go into residential, and he says, and I like the commercial part. And I asked him, what would you do? And I just made my big first commission with you. What would you do? And he says, you know, invest in yourself. Go out there, and he recommended to me at that day to go out and look into the CCIM program, which is a organization, a certified commercial investment member, and they kind of specialize themselves in education. You go through a lot of courses. You have to do some, take a test. You have to do so much business, and it's I think my number was 872, and I think there's like 10,000 now or something.
872. Look at that.
Yeah, and then one of the guy that I talked to on top of him was a guy named Ralph Harkinson in town.
Okay.
He was 3. He was number 3.
3.
Yeah, so
that's incredible.
So it took me about 4 or 5 years to get anything I had to do, and got my designation, and got my PIN, and then my brother Brian went and got his CCIM designation, and then Brian's been quite involved with the SIOR, the Society of Industrial Realtors,
awesome organization,
which is a great organization. So if you're going to be an industrial, you want to be associated with that. If you're going to be a commercial, you want to be associated with the CCIM group. And then there's so many designations. I don't even know how many for the residential field, but you know, I see all these people that are certified managers, certified this, certified that. But And when you're doing that, not only that, you're going to find out that you're going to be, again, meeting with your peers. You can always call somebody for help. One of the things in this business that I wish I did more, but I did a lot when I was younger, is the referrals, because if you get a good network of people all over throughout the United States, or just even in your own backyard, in Illinois, you throw it to somebody you trust and that are going to do a good job for you, and you get referrals. In fact, that's what I'm talking to everybody here at the office about. We've got to start doing some more referrals and figuring that out, because right now it's challenging out there right now.
Right.
Yeah. So yeah.
That's super interesting. After 50 years in brokerage, have you guys also been investing in properties along the way?
Oh yeah, that's how we got started. My dad started back with Jim Murphy. My dad was a land guy. He loved land.
Okay.
Just loved farms. He kind of followed the expressways, where the expressways were going, and where interchanges were going, where it's probably where development would go. And then he taught us how to work. I haven't done it for a while because I just didn't have to. But when we were first started, I'd go and we introduced ourselves to the people at Northern Illinois Gas and Commonwealth Edison, and they had a resource. I'm sure they still have a beautiful resource where they're going, where they're expanding. So where utilities go, development goes. And my dad always said, where development goes, where's it going to go first? It's going to be where the rivers, you had the railroads, and then you had traffic. So where are the interchanges? Where is going to be the most? What's going to be the location where most people can get to as easy as possible? So my dad always kind of looked at the interchanges, and he put groups together. So he'd go he'd go out to 10 or 15 of his friends or his colleagues and say, hey, listen, let's buy that farm, let's get it zoned, let's take it through the process, and then let's try to sell it, and then let's churn that money and buy another one. So that philosophy I've taken, and so has my brother, and so has our firm, for a long time. He was land, I liked commercial real estate. So my first syndication was back in about, 76 or 77. It was a shopping center in Farnsworth that I felt had a lot of opportunity, had a lot of stores, probably way before you guys were even born. Coast to coast. Coast to coast was a kind of like a hardware store. So, and they had a couple other leases that were in there at $2 or $3 a square foot, where by the time we bought it, and by the time the old guy had the leases came down, we could turn those leases from $2.50 or $3 to $6 or $7. And when you did that, then not only that, you generated some management opportunity. And so we started managing the properties that we syndicated, and eventually we developed a management company. And we've only really managed one property that we didn't have some kind of ownership in.
Oh, wow.
And one of the things that we've done, that my dad did, and that we've continued, is that we've always thought that if I'm going to come to Nick and say, hey, Nick, I really got a good deal for you, it's going to be a lot easier for me to sell it when we're buying 20% or 30% of it ourselves.
Exactly.
Rather than saying, okay, I'm going to put all this money together, and for putting that money together, I'm going to get part of it. And so we always want to have skin in the game, and when we had skin in the game, it also allowed us to control the property, manage the property, and then sell it and create more commissions, and that would give us a pool of money to go buy the next thing. So, so it's worked very well, and we still use that, especially now, because right now like I say, the lending institution, it's harder to get loans right now. So we're actually talking to people about selling properties on contract for 2 or 3 years. Let's structure it, sell it on contract, get yourself a good interest rate on that. Be aggressive, so you're better than what you get 7 at the bank, offer 5. You get 5% for the next 2 or 3 years, and then let's just see what happens to the market and finance out of it. So so there's a lot of different ways to put deals together.
I love it.
Yeah.
And for us, syndication is a very common term, but for the people that don't know, could you explain what a syndication is?
So I don't even think they use that word anymore, so I'm kind of dating myself. But when syndication is when you go out there and you find a piece of property, you put together an offering memorandum to solicit investors, investors to come and invest with you to buy the property. You show them what the anticipated return is, what our exit strategy is, and hopefully it goes that way. And you just never know, but knock on wood, we've been pretty lucky.
Love it.
Yeah. So.
That's awesome. And then, so land and then you transitioned in commercial properties. That's what you liked in about 77, 76.
Yeah.
Over that time period, now it's 2024. How many deals do you think you've done if you could throw out a number of invested in that time frame.
Well, what's interesting is that, of course, a lot of times tax laws indicate some decisions that you make.
Yeah.
So we put about probably 6 or 7 partnerships or syndications together on income-producing property, and then and then I want to say it was like in '86, they've changed the tax laws.
Okay.
Where I think the whole crux is that they were going to eliminate the, or they're going to increase the depreciation from whatever it was at that point in time, like for 35 and a half years. I think it's still that, and they were going to be increasing capital gains. So we elected at that point in time to say, hey, to our investors, hey, this might be a good time. People are trying to buy under the old tax laws. They're paying premium for property. So we sold most of it.
Okay.
And everybody, knock on wood, we did pretty good for everybody, and it gave us a good pool of money to start to buy land again. So we started to buy some more land.
Lots of money.
And then and then I started building in 92.
New construction?
New construction, yeah.
Oh, wow.
In fact, you're pretty familiar with them.
Yep.
You and your company did a fine job with us over there at Galena Partners,
Thank you.
the 2 shopping centers. So
Yep.
yeah, we built that scratch from out of the ground, Galena 1 and Galena 2. And again, that was with another resource that I had from some dealings I did with a company from overseas. And,
Okay.
he was my partner in that. So it kind of goes in cycles.
Yeah.
I've always, my dad loved land because the land's always there.
Right.
You know, maybe if I look back, maybe I took on too much debt sometimes, but you know, I always felt felt very confident
In the deal.
In the deal. My dad always liked to just raise the money and have no debt.
Okay.
But
Two different ways of looking at it.
Yeah, with land, it was a little different because the only thing you got was farm crops. With me,
Yeah.
I was building stuff where we were generating income that threw off pretty good
Exactly.
enough income to give you a good return on your investment and pay the mortgage. And but sometimes blips happen.
Right.
Yeah. So.
That's awesome. And over the next 5 years, what do you think would be key investments, maybe that you yourself are going to be making, or that you would advise someone to make?
Yeah, I've always been a retail guy, and I'm, retail is kind of have been reinventing itself over the last 7 or 8 years.
It's a little bit of a mixed bag.
It's
right
a little
now.
bit of, if you read about, you hear about how many stores are closing, but they don't ever concentrate on the new stores that are opening.
Oh, so true.
It's just that they're re-identifying what they're doing with today's technology with you kids and everything. I mean, they know exactly what you're doing, so they don't need a big 200,000 square foot Marshall Fields. What they need is to either team up with somebody or build a smaller space where they know that you bought it online, you're taking it back there. They already know what you like. You go to this fulfillment center, you go there, and while you're taking it back, you see about 10 or 30 things that you like. I was like, oh wow, I'm never going to buy there.
Yeah.
But you don't need the big boxes, you don't need the utilities, and who knows where it's going. But back to my point, the big boxes are closing, but they're opening more and more little stores and smaller stores with new concepts, new products. There's so much stuff. I like to read the stuff, but still, I'm still nervous. excuse me.
No problem.
Still a little nervous enough about. I'm not confident enough about building any more retail myself. But retail's, it's going very well right now.
I love it. So you would recommend over the next 5 years?
I recommend what's
investment.
happening there. As I mentioned before, I would recommend trying to either pool yourself or associate yourself
with money managers.
With money managers right now, because there's going to be a lot of opportunity on the rolling interest or the mortgages coming due. Yeah. And industrial's always been good. The only thing that stopped industrial growth right now is there was so much on the docket, so much was being built, and the interest rates, when everything was underwritten at 2 and 3%, now it's up to 7. But
it seems that was a little bit overbuilt in some. Some
even though it's still
segments.
hard to find anything out there industrial in the small sector, but it's so expensive to build it that you just can't get the numbers you need to pay for the cost of the money and to get some kind of a return. But I think you're always going to be good with industrial. Housing, I can't really talk too much about housing market, but other than that, that's the same thing as us. Know your product, know your market, and just know what things are selling for. And I don't even know how these guys in the residential real estate can determine that right now, because it's so hard.
It's crazy.
There's not a lot of good product. Well, I shouldn't say good product, but there's just not a lot of product out there though it's being built now. It's starting to be built.
And it sounds like throughout your career, you've had a lot of successful partnerships, and that was the key to being able to work out a lot of those deals. What would you say is the key, I guess, to having a successful partnership?
Well, we've always, like I mentioned before, we've always been, first of all, you have to be comfortable in that you're going to buy it, you buy it, and that's what we always did. We always put it under contract. We always, said that we'd find the financing, we would go on the line for the financing, and that we would own a portion of it. And so with that made, that was the one successful key is that we remained in the deal.
Okay.
We just didn't get a part of the deal for putting it together. So it was easier for me to sell it to you because you say, hey Nick, we're taking 20 or 25% of this. You want in? We really feel it's a good deal. And our goal then was to do a good job, manage it well, turn over the leases, either keep it and give dividends to our investors, or if we felt that we could sell it and maybe go buy something, a couple more things that were good. It gave us the opportunity to do that because we had, we usually raised about 50% of the cash, so we pretty much always had only 50% debt. So it allowed us to have a lot of equity if we wanted to sell it and go on to other things. But I would say the best thing in my idea that we've always been is that we've been part of that deal.
That's awesome.
Always been part of the deal. Never just took a stipend for just putting it together and going on to the next deal to make a commission. We've always been part of it because we believed in it. And like I said, it also allowed us another revenue stream, which allowed us to create a management company, and then it also allowed us a pool of money when we sold it to go on to the next investment, whether it be land, whether it be industrial, whether it be whatever. I've never been much into the multifamily because that's a heck of an industry, and I know some real good players in there that I've sold things to, but it's all about management with multifamily. For sure. Multifamily is, you got to be a good manager.
Hands on.
Yeah. I had 6 condos once, and I'd go collect the rent, and girl's there with her baby crying, said I don't have the money. I said, okay, well I'll get it next month, and of course 3 or 4 months go by and she still doesn't have it, and then you got to get them out of there. And I said, I don't want to manage people. I don't want to manage these people.
No, for sure. And your dad didn't. It sounds like your dad didn't use debt. You used debt on a lot of your deals. As a young guy getting in to investing, you mentioned align yourself with a money manager. Would you recommend as a young guy to use debt or to partner? What would be your recommendations if you were 22, 20 years old getting into investing in 2024?
I can speak from experience with my son. My son doesn't like debt. Okay. And I don't care, what I tell him what I would tell him. I got him into one deal right here where he signed on some debt. He just doesn't like it, and if that's what it is, that's great. I can't argue with that. Yeah. It was my idea because, and some of the tax laws have changed where we were starting, there were some advantages where you could write off all the interest, and now there's limits on that. If I were to do it over again, I would probably say I'd raise more equity, try to raise more equity. Like I said, we always did, personally I might have done like 70% financing. But when we were putting groups together, we tried to only have 50 or 60% debt on it. Right now, I've gone through cycles where we're at 7%. When I got my first loan to buy my first house, I got 11, and I was happy with it.
Right.
So things go ebb and flow.
100%.
But so I think once they start doing a decrease, I think it's going to be a slower decrease. But you're going to know that money is going to be 7 to 6.5 to 6. It'll keep going down a little bit once it's.
Powell mentioned there may be some rate.
I've been hearing that now for September. We've been hearing that. We're going to have 4 or 5 decreases this year, and we haven't had one yet.
Yeah, one day, right?
But I don't know how they read that stuff. One thing that astonishes me is I don't know, what you got the younger generation is doing on the internet and the money that's being made on the internet, and how do you follow that? A lot of kids are making a lot of money. A lot of people are making a lot of money, and they're not being taxed on it yet. And they're out there spending these funds, but it's not. I don't know how they read that or how they can read that. And I'm sure they're reading it some way, right. But I think it's just that sector that keeps buying, and you're not. Maybe that's not being filtrated into what the feds are looking at to curb inflation. And I don't know. It's a mystery right now. It always is, but we've gone through it several times, and we've always gotten through it.
I love it.
Yeah.
And then on the brokerage side, what would you say is the largest or the most interesting deal that you've been able to pencil over your 50 years in brokerage?
Oh boy, I don't know. I was lucky to meet a guy from Burlington, Iowa, a guy named Bill Yaste, and he'd come up here with a company called Aldi Foods.
Yeah.
At that time, we called it with Aldi Benner, and Aldi introduced me to Phil Neely, who was the president, and he asked me to do an assignment. I did a big assignment, and it was really kind of a long story to really get into because I think we're on short of time right now. So, but long and short of it, I ended up meeting the Dr. Ulrich Walters. Ulrich Walters ran the worldwide division of Aldi Foods, and from that meeting with him, he's introduced me with so many people, and we've done so much together.
Wow.
From building shopping centers to buying shopping centers to buying a couple thousand acres for the Albrecht family, all from one meeting from a guy that just came out of Burlington, Iowa, to try to lease a building. So doesn't really answer your question, but that lead from that lead from this guy set me up, and I'm still partners with Ulrich Walters to today.
Really?
Yeah, and I think they've been in the business over 40 years. Yep.
That's incredible.
Yeah,
so one chance meeting. How'd you meet the guy from Iowa?
I had a listing, and he came up here, and I met him, and we put the first. Really, it was the only Aldi Benner that there. Well, it was the second Aldi Benner, and then Ulrich Walters came in, did a deal with Benner Tea Company, and then they just became Aldi and have grown since then. So you just never know in this business what's going to be your next lead.
That's so true. Where do you see the future of Dolan and Murphy over the next 5-10 years?
Well, like I said, I'm going to be 72. I'm going to be here because I want the success of our company to come. My son JD is now the managing broker.
Nice.
And then we have my nephew Danny. JD I think is 36, and I think Danny's 41 or 42.
Okay.
And then I have a younger brother Ryan. That's just over 50, so they're going to be the future of it. We'll continue to work. I love working. I still love the game. I don't want to take as much risk as I used to because I don't, I don't have the 30 years of the mortgages to go anymore.
Yeah.
But I would say I think the industry will be good. Aurora has been a blessing to us, and Aurora is growing in leaps and bounds. There's so much. There's so much possibilities downtown Aurora. If it wouldn't be for the COVID and the money crunch right here, there'd be probably 3 or 4 more projects under apartment projects, which one is being built right now, which is going to generate another 3,000-4,000 people downtown in Aurora living, and that will generate some real need for the commercial, which will follow.
Yeah.
So I think there's opportunity out there. I think just go. Do your research, line yourself up with some money right now. There's going to be so much opportunity. See what people need. There's a lot. You mentioned a couple of the companies that are raising tons of money right now to buy this stuff. So just go out there and do some research, see what's coming due with mortgages in the next 2 or 3 years, and try to get yourself in front of them and see if you can land a deal.
For sure, I love it. And you may be 72, but man, I've never seen somebody get up quicker on a ladder than you. And you're still hands-on. It's awesome. You're checking out a few properties, a few of his properties.
Fun to work with you and your dad, of course.
Coming up there, right? It is incredible. I'm like, this guy's he's getting it.
Cool.
That's awesome. That's awesome. Well, where can anybody go that's listening and tuning in to our podcast go to find out more information about you, connect with you, your company?
Yeah, just we're pretty much dolanmurphy.com. So you can go to our website, and there's a connection to all the brokers or anybody in our office or management.
Wonderful.
Yeah.
Well, Dan,
okay,
it's been a pleasure.
Great.
Thank you so much for having me on our
nice
show.
to see you too.
Yep, awesome.
Great, thanks.